Hey everybody, it's John King, and it is Monday the 25th of March. It is 7 p.m., and this is the first of 5 straight weeks of Monday night live stream webinars you are going to get from me. So I'm looking super forward to giving you as much information as I can as we get the countdown to Dream for All and the launch that is going to be happening very, very soon. So first and foremost, what are we going to cover tonight? We're going to cover a lot of things. I want to really prime everybody for Q&A. So as more people start popping into this live stream, if you have questions about anything regarding the launch, regarding approval and the loan process, regarding questions and answers about just the program and Dream for All and how it works, I want to encourage you to ask me those questions. We also are going to be talking about the home buying process. And really, as you're embarking on this process right now, for everybody here, you're a first-time home buyer. And I want to really help guide you through the process. I'm going to provide you with some information about what banks look for, about what steps in the process happen and when. And then each of the next 4 weeks, I'll be giving you updates on what's happening with the Dream for All launch, but I'll also continue to educate you on the home buying process and things you need to know about utilizing the Dream for All program. So first and foremost, I want to let everybody know the registration portal opens 10 days from today. So on Wednesday, the 3rd of April, next week on Wednesday, the registration portal is open. You'll be able to find the portal by going to Cal Haffa's website. So let me pull up the website and show everybody that if you go, let's go right here and go right here. So if you go to calhaffa.ca.gov and you look right here and it's going to say California Dream for All right across the top, and you click on home buyers. It's going to take you to the Shared Appreciation Loan homepage. From this page, on the right side, you're going to see register for a voucher. And right here is where you're going to go. It opens up at 8 a.m. on April 3rd, closes at 5 p.m. on the 29th. So be prepared and make sure that you are ready to get your entry into the portal, and don't be late, because there's some information you're going to have to upload, and I want to make sure that you understand what is required of you. I've had a lot of people ask me a lot of questions about this. So first of all, right here, this button is where you're going to click to register, right here where it says register for a voucher. Now, if you go back to Cal Haffa's homepage, what you're going to find is there is way down here on the bottom, a lot of stuff, but way down here, you're going to see latest news. And right here on March 4th was a program bulletin. And that bulletin walks through everything that you need to know about registering. I hope they're going to provide more information. I am going to actually do a tutorial, a walkthrough on the morning of April 3rd. So I'm going to log in. I'm going to enter information. I'm not going to submit it. I'm not going to do a real one, but I'm going to record it so that you can see me do the walkthrough. So that if you're not sure what's going to be expected, you're not sure what questions they're going to ask, wait, you don't have to do it on day one. There's nothing forcing you to get your information in on day one, but you want to get it in as early as possible. You want to get ahead of the curve so that you've got your information in there in case they ask for anything else, in case there's questions that have come up that you say, hey, I need to research that and get it right. You don't want to wait until the last minute to get your information put in there. So now let's go here. And you're going to walk through the process. Step one, you're going to get your pre-approval letter. You're going to create your account in the registration portal. You're going to have to upload paperwork. So the paperwork you're going to upload is going to be the pre-approval letter that I gave you. And then you're going to issue your government issued. You're going to upload your ID. So they want to prove who you are. That's going to be your passport or driver's license, state issued ID, military ID, permanent residence card, visa, or employment authorization document. The state is also going to want to prove where you live. I had a long conversation with a client today about this. Guys, they want to make sure you're not playing games with where you live and what region you are applying for. So I want to remind you, the regions are critical. I'm going to show you this chart of the regions again. By the way, up at the top right here, you will see just up there, right there, you're going to see a QR code. If you have not already done so, download my book. It is a comprehensive guide of me walking you through all of these steps and understanding what needs to happen. So you can refer to each chapter. You can get the information in there. It is my ebook. It is absolutely free as my gift to you. So please click on that QR code up there and get a copy of my book. Now, why does this matter? Because it matters what region you are buying in. Let's make this bigger. Okay. So it matters what region that you are buying in, not buying in. It matters what region you are living in when you register, because that's the region that you're going to be put into the pool of to be selected. And so you can't lie. Like, don't lie about it. Don't fake it. Don't try and pick a different region. Don't game the system, because if you get caught, you're going to get kicked out, and then you lose your shot altogether. Cal Haffa, you'll see it on this document, made it clear, hey, we're also going to refer people who try and provide falsified information. We're going to refer them to the Department of Justice so for potential prosecution. Whether they're going to do that or not, I don't know, but don't take a chance. But what you notice here is the share of the state's population. And so this column right here. So let's make that column red. Okay, that's the percentage of the money that is going to that region. And so if you are in a position where, hey, John, I'm about to move. If you are moving from an area that has a low percentage of the state's population to an area that's a high percentage of the state's population, make that move before you register. Before you register, because you have the greater chances of getting money, statistically speaking, in these higher cost regions. Now, I had a conversation with a client today who said, John, I kind of think statistically it's going to be the other way around. And they might be right. Okay, they might be right. But what we are looking at, because he said, hey, he's down in Southern California. He had lived in Orange County and moved to the Inland Empire. He was in San Bernardino County. He said, John, the way I look at it, there's a lot more people in Los Angeles County. 25% of the population is in Los Angeles County. And I'd be better off buying in the Inland Empire because there's fewer people to be chasing the money. And in a way, I see where he's coming from. But I don't agree with the thinking, because what I look at is how much money did they use last year? The Inland Empire used 14% of the total money last year. Los Angeles only used 9% of the total money. So when you look at this, you'd say, well, wait a second, why is that? Because the average person in the Los Angeles area is looking for, kind of, you got the haves and the have-nots. You got a lot of expensive homes, and then you got a lot of inexpensive homes. And so it's harder for the average person to actually use this program, because the average person, a lot of the population in the Los Angeles region make really good money, and they live in really expensive houses, which this program is not designed for. And so there is even though 25% of the population lives in Los Angeles, you have a lot of people who make on the lowest end of the wage range, and those people don't make enough to buy a home in Los Angeles. And you got people at the highest end of the wage range that make too much money to fit into this program. And so you're right in the middle. If you qualify and you're in Los Angeles, there's actually a small group of people right in the middle. But if you look at the Inland Empire, you don't have the really, really, really high wage earning segment. You have some, but you don't have a huge population of them. And you also don't have the disparity between the haves and the have-nots in the Inland Empire. So you're going to have more people chasing the money, which is why I think that if you have a choice, let's pretend that you are about to move and you're moving from Los Angeles to the Inland Empire. Well, then you want to register yourself in the portal before you make the move. Okay, I hate this little thing popping up. You want to register yourself in the portal before you make the move, because you don't want to be in a position where you've made that move and it puts you in a lower area of eligibility. But the fact is, don't fake it. Don't try and put an office address. Don't try and put an address of your friend, because if you're caught, you're going to get kicked out. Okay, follow the rules and see if you get what you get, but don't try and fake it, because you're going to risk really putting yourself in a bad position. All right. So you have to have proof of your current address. And then if you were in foster care, you have to have foster care documentation. All of that has to get put in. You're going to be certifying a lot of things. You're going to be confirming all of these things. I'm not going to go through them all, but they're going to walk you through a lot of things that you have to attest to, that you have to certify, hey, this is true, which is why they aren't letting me do it for you. You have to do it yourself, and you're going to be attesting to these things being true. Your voucher application will require the information of both of the parents of the person who's the designated first-generation buyer. Remember, only one person has to be a first-generation buyer. So whoever is designated as a first-generation buyer, they're going to want the contact information for each of that person's parents, including date of death. And then you're going to submit the application into the portal. And then guess what's going to happen? We are going to wait and wait and wait. What are we waiting for? We're waiting for the state to vet 1,700 to 2,000 people that are going to be selected as the winners. And as they go through that process, they're going to double check each winner to make sure they meet all of these criteria. And you might get a notification via email, via the web portal that says, hey, we need additional information from you. Maybe I have an example today. As a matter of fact, I learned something new today that I'm going to explain in just a second about, be careful where you get your information from. But I did get confirmation that CalHFA is going to allow two people in the same household to submit separate portal requests, provided they are not a married couple that are looking to buy together. So they might want a letter of explanation. So what they said is that the buyer may want to preemptively submit a letter of explanation saying, my sister and I both have submitted separate portal requests, and my sister and I live together right now in our mother's house that she rents, and we are both going to be buying our own home separate from each other if each of us are selected for Dream for All. So I was told today that they are going to be okay with that, and you just have to submit a letter of explanation. Well, if you didn't submit the letter of explanation up front, the audit process is going to catch that, and it might ask you to give further information. You're only going to have a short period of time. They have not said how long, but you can have a short period of time to provide back that further information. So be ready to respond to the portal requests when that third party is validating the information. The second thing to be aware of is that they have to create twice the size of the list. You got one group that is going to be the people who are the winners. Then you have a second group of people that are the wait listed, the people who will get the voucher if the first group doesn't use it within 90 days. So don't lose despair. Don't get upset. Don't lose despair. Yes, you can lose despair. Don't despair. Okay, don't despair. You may not be the winner, but you might be on the wait list. They'll let you know once they notify everyone. The unknown is, are they going to notify everyone all at once, or are they going to notify you one at a time as you pass the selection process? I don't know. But what I do know is you're going to have 90 days from the day you get your voucher. So you need to make sure that you start shopping right away. One of the things I'll be talking about over the next few weeks is how to pick your realtor. There's some craziness going on in the news right now about real estate agents and the buyers need to pay for their own realtor fee. You don't need to worry too much about that, but you do need to stay informed, and I'm going to help keep you informed. I got a video I did last week about that you should watch, but I won't go too deep into it today, but I'll keep you updated. Quick reminder, if you have questions about anything at all related to mortgages or Dream for All, post them now, because I'll be here for about an hour, and I'll be sharing a lot of good information about Dream for All, about the home buying process. I'll also be answering any of your questions. So if you have questions, feel free to post them. I will get to them as they pop up. All right. So that's the Dream for All registration process. I want to kind of shift gears, and I want to talk about the home buying process. So I'm going to go through kind of a journey of what banks look for and why, what things you need to be worried about. And I'm going to make sure that I really focus on the timeline of when this is all going to happen and how you need to be prepared to make sure things don't go wrong between now and the time you get your voucher, or between the time you get your voucher and the time that you get an offer accepted on a home, or if you're looking to use a different program. If you don't get selected for your voucher, if you want to use a backup plan, you've got to make sure that you follow these steps and that you understand a high level of how the mortgage process is going to work and how your journey is going to go. And I'm going to walk you through that journey today. So as a reminder, if you have questions about this or anything else as we go through this presentation, just type your questions into the comment section of whatever platform you're watching on, and they'll pop up in my portal, and I'll be able to pull them up on the screen. All right, so I do want one last thing to tell you. I'm going to be doing live webinars every single Monday night at 7 p.m. for the next 5 weeks. So you are going to get a lot of me, but I'm going to help educate you through this process. All right, so let's dive in. First of all, be careful where you get your information. I had a client this weekend who had sent me a link of a question that came from CalHFA, or so the client thought. And if you look at this page, I'll make this a little bit bigger so you can see it better. And let's not do that. Actually, I guess that's fine because you can see the page. So right here, it's fuseqa.com, but it looks like it's CalHFA's website. And you start Googling things and you start looking for questions and you're looking for answers. I actually asked CalHFA today if this was put together by them. And they said, you know what, John, I don't know. I have no idea. Like, there's so much information out there. We're seeing so much bad information out there that we're not really sure what information came from our marketing department and what information didn't. But if it wasn't to calhfa.gov website, don't trust it. Don't trust it. Here's an example. This is a question that was on that website that said, if a property is completely remodeled, do you still require a home warranty? By the way, all CalHFA loans require a home warranty when you buy the home. You have to have a 1-year home warranty on it. It's a mandate for the loan programs. And the answer on here was, we sure do on every home we finance, even new construction. But lo and behold, we go to the next page here in my slideshow, and here is CalHFA's website. I kind of cut it off here because I was trying to make it bigger. CalHFA's website, on their conventional loan program handbook, it says a mandatory home warranty is required. All first-time homebuyers must obtain a 1-year home warranty protection policy. Exception to that policy is if you're purchasing a new construction home. Well, wait a second. Isn't that what they just said here, is you have to have it even on new construction? But CalHFA's guidelines say it's not required. So be super careful about the information that you're getting, because I don't know where it came from, but don't take it as fact. Don't take anything I'm saying as fact. I am trying not to say anything that I'm not validating with the people at the state, but some things I'm guessing on, and I try and tell you when I'm guessing, okay? I'm trying to tell you I think, or they're telling me, just because they told me, if it's not in writing. That, by the way, CalHFA told me a month and a half ago that a brother and a sister living in the same household cannot have 2 registrations, but CalHFA told me today, no, they can. You just need an explanation letter. So we got to be careful about the information we're getting. CalHFA is trying to figure this out. They're doing the best they can. I don't want to throw them under the bus. I appreciate how hard they're working, but you just have to be careful, because if you're getting information from the wrong site, this looks like CalHFA, this looks like the right information, but you're getting information from the wrong site and you're going to get the wrong answers. All right, anybody else who's showing up? We're getting more and more people who are showing up right now. If you have questions about what I'm talking about or anything at all, post it into comments on whatever platform you're on. I'll be able to answer those questions live as we're talking tonight. All right, here's something new that I was kind of tinkering with, which is the fact that mortgage insurance is actually going to be required if you're buying a home over $1 million. You said, John, that can't be true. How can they force me to have mortgage insurance if I'm buying a home over $1 million? Here's the answer: math. Math is why you're being forced to pay for mortgage insurance if you're buying a home for over $1 million. So here's how the math goes. The math says, look, if you are buying a $200,000 home, you can put 5% of your own money down, which means you're putting $10,000 of your own money is the most you can put out of pocket. Plus your 20% from the state, which is $40,000. So you're putting $50,000 down on a $200,000 home. That's 25% down, 5% from you, 20% from the state, and that's 25% down. Your LTV, or loan to value, is 75. That's perfect until you get over $750,000. As soon as you get over $750,000, the state's money stops being 20% of the purchase price. So it's at $800,000, you can still put in your 5%, but the state's money is no longer 20%, it's 19. So your 5% plus the state's 19% means that you're putting 24% down, and you're borrowing 76% of the purchase price. Fast forward to a $1 million home. On a $1 million home, let me see if, no, I can't. Okay, on a $1 million home, you are putting out of your own pocket 5% or $50,000. The state's money is $150,000, 15%. Your 5%, their 15%, you're putting 20% down, you're fine, no mortgage insurance. But you get 1 penny over $1 million. One penny over $1 million. Now, your 5% down plus the state's $150,000 no longer equals 20%. That's right, it no longer equals 20%. So now, you're not putting 20% down. You have to have mortgage insurance. Now, mortgage insurance can be paid a couple of ways. You can pay it as a monthly fee, or you can pay it as a one-time upfront fee. But there's already an extra one-time upfront fee that you're paying called a high balance fee, when your loan amount's over $766,000, which it will be if you're over $1 million purchase price. So there's a couple of taxes that you're paying here. I got to tell you, less and less do I like this for homes over $1 million. You can do it. You can do it. Absolutely, for sure, you can use this to buy a home for over $1 million. It's not as good of a deal as it was last year. This year, if you buy a $1.2 million home, $60,000 of your own money, $150,000 from the state, you're borrowing $990,000. But you're only putting 17% down. You're paying mortgage insurance. You're paying a high balance fee. Okay. The high balance fee, let's see right now what Cal Haffa's high balance fee is. It changes every single day. And we can pull it up right here. Sorry, I can't get my mouse to go. There we go. All right. So I go to Cal Haffa. You can pull up their interest rates every day. You can see exactly what your interest rate would be if you found a home today. Every lender has the same interest rate, all of us, because Cal Haffa decides the rate. So if you go right here, you got to lie. You got to tell the computer that you're a lender. No big deal. Just say I'm a lender of real estate. No big deal. And then right here, rates and reservations. And then view today's rates. And here's today's interest rates. So Cal Haffa has today's interest rate at 6.625 for a conventional loan with down payment assistance. This one right here. And your high balance fee is almost 1%. So you're going to pay a high balance fee of almost 1%. So you're getting from the state 15% of the purchase price. And you're going to pay all of the normal fees associated with doing loan, plus an extra 1% for the high balance fee from the state. Now, add to that the fact that you have to pay for mortgage insurance if you're over $1 million. It makes it less attractive. Again, I'm not saying don't do it, but it definitely makes it less attractive compared to if you had your own money. If you have the ability to put down your own money, and some of you are saying, John, what are you talking about? We can't do loans that high in the area. The highest loan is $766,000. That depends on what region of the state you are in, what county you are in. All right. Now, let's talk about kind of the home buying process. Let's talk about what are the three things that banks look for, because there's three keys that you have to meet in order to get your pre-approval letter. If you've already gotten your pre-approval letter, great. If you haven't, I'm interviewing for the process. Right up here in the top corner above me is a QR code. You can download my ebook. Once you download the ebook, you have the option of scheduling an appointment with me or starting the loan process. So I'd love the opportunity to help you. And the ebook is absolutely free. So feel free to download the ebook. So what do we look for? Cash. Now you might say, John, what does cash matter? Because the Dream for All program is covering all of my down payment and all of my closing costs. Well, first of all, depending upon the circumstances, you're going to be coming in with some of your own money, whether you're coming in with your own 5% down, or whether you're coming in with the closing costs or both, you're coming in with at least your earnest money or the upfront deposit that you are paying. And your earnest money has to be sourced. You cannot, we're going to look at your bank statements. Don't deposit cash. Depositing cash is a bad thing. Even though I said cash, I'm not talking about green pieces of paper with pictures of presidents, okay? I'm talking about the money in the bank needs to be traceable. If you deposited money that we cannot trace, I cannot use that money. And it's a double whammy if you say, oh, I'm sorry, I deposited it. I'll take it back out. Let me give you an example. If you have $100,000 in the bank and you only needed $50,000 to buy a home. Bad example. Okay, so you have $60,000 in the bank and you needed $40,000 to buy the home. Okay, and we look at that and we say, hey, there's a large deposit here of $20,000. And so, you know, we can't count that money because that deposit was cash. So you have 60, you need 40, and 20 of the 60 is cash that was deposited. And I would say I can't count that 20 grand, but the good news is that you still have $40,000 left over. And you the next day say, oh, you know what, John, I because you said I can't use that money, I went ahead and took it out of my bank account because I'm not going to be able to count that money anyway. So now your balance has dropped from 60 to 40. But guess what? I still have to subtract the $20,000 because it's called co-mingled money. That money was in there as part of the entire 60. We can't just assume the 20 you pulled out was the 20 that was the untraceable cash. So now I treat your balance as 40 grand and I still have to subtract 20. It's a double whammy. Don't try and fix it yourself. If there is a challenge with deposits, talk to me. Talk to your lender. Hopefully I'm your lender. If I'm not, talk to me anyway. Okay. If there's a challenge with your cash and your deposits, you need to figure it out now. Now, here's the difference with the Dream for All program. The difference is, first of all, a lot of you don't need any cash except for your earnest money. But secondly, we're actually not proving all of this until you get into contract, which is after you get your voucher accepted, after you find a home, and then we're having to give the 2 months of bank statements. So if you have money that you have somewhere that you don't want to have to document properly, then put it in the bank now. Because if it goes in the bank now, I'm going to have the April bank statement and the May bank statement. Like, put it in the bank today. Because I have the April bank statement and the May bank statement. And by the time we hit June, that money, I don't know where it came from. Because I'm only looking at the statement that went from April 1st to April 30th and May 1st to May 31st. And when you give me that statement in June, I never knew you deposited the money in March. But if you wait until April to deposit the money, it won't be seasoned until July. Because I have to see the May and the June bank statements. And so if you have a challenge, now is the time to fix it when it comes to your money, like literally this week. Now you can get a gift. Don't sweat it. Gifts are allowed. If you don't have the money in your bank, or you don't have the money you can trace, but you have a family member who has the money, they can give you a gift. It's no big deal. Don't sweat it. Just call me and I'll talk you through it. Okay, the second thing we care about is credit. Credit's a really big deal. Now, to get your pre-approval today, we got to look at your credit today. But that's not the final credit score. Credit's only good for 90 days. So we're going to be in a position, technically 120, but that's 120 days to when you actually fund the loan. And so there's a very good chance that a new credit report is going to need to be pulled. And so you might be in a position where you think everything is fine because you have your 684 FICO score until it gets re-pulled in July and you're at a 676. And you don't meet the criteria. Now you're scrambling because you're in contract and you don't have the credit score required for the program. So pay attention to your credit. Make sure you're paying everything on time. Make sure that you keep your balances low compared to your credit limit. That is the single biggest thing you can do to improve your credit, is to keep your balances low compared to your credit limit. And make sure that if you need to make a purchase, that you talk to me first if you're making a large purchase. Okay, credit is critical because credit also has to do with your debts to income ratio. And that's the last piece, which is your income. Okay, if something changes about your income between now and when you get your offer accepted and when you get your voucher, you could be in trouble. You could be up against a situation where you don't qualify anymore because your income went too high or it went too low. I had a client I talked to recently who had a lot of overtime in 2023. And he talked to me about it. He said, John, I should be well qualified. My 2023 taxes show, X amount of dollars in income. I made $130,000. And when I talked about it, I said, well, how much of that 130 was like, what's your hourly wage? And it added up to like $80,000. I'm like, well, wait a second. You're making $40 an hour, $80,000 a year. And you're telling me that your tax, your W-2 for that job was 130. And the client said, yeah, because I had $50,000 of overtime last year. And I said, well, that's great. But I took a look at his pay stub now, and he's only got a few $100s of overtime so far this year. He said, well, I slowed down. I stopped working overtime. We're in trouble. The rules for income say if your income is variable, I have to average it over last year and year to date. This is for conventional loans, which is what we're doing on Dream for All. So if your income's variable, I have to average it over last year and year to date. And so if you're in a position where you have variable income, don't slow down your income. And if you have stable income, you're fine as long as you continue working the same number of hours. But with the Dream for All program, there's a maximum amount of income. So you actually could be up against a situation where you got a pay raise or you started working extra overtime and it caused you to make too much money. So you've got to pay attention to where you're at and understand how we look at it. And so if your lender has not had a conversation with you about that, you're working with the wrong lender. Okay, because every client that I'm talking to, we're talking about their income levels. And if they're close to the threshold, I'm telling people, don't go get a pay raise. Don't work a bunch of extra overtime. Or if you're at the bottom end, I need you to work a lot of extra overtime to catch up on it. But don't get caught flat-footed. Okay. All right. But there's a fourth thing we care about. It's not just cash, credit, income. We care about the property. And this is going to be critical when you're out shopping for a home. You're going to think, I have 90 days to find a home. And my voucher is good for 90 days. Okay, and you might find a home and then do an inspection and find out the home doesn't work for you. You might find that there's condition issues with the property that you're not willing to take on. I had a client who bought a home last weekend, went into contract last weekend, did an inspection on Thursday, canceled on Saturday, found another home on Sunday and is in contract, and we're going to do inspections this week. So sometimes it works out that well that you cancel one and you find another one right away. Sometimes it doesn't work out so well. And so understand, we care about the value of the property. It's got to be appraised to be worth what you say you're buying for it. If it comes in lower, we're in trouble, because the Dream for All funds are based on the lesser of how much you're buying the home for or what the appraised value is. And so the funds are based on that. The loan amount is based on that. So the value of the property matters, but so does the condition. We cannot accept properties that aren't livable or that have health or safety issues. So be aware of the condition of the property. And specifically for Dream for All, it has to be a single family residence. When you look at type of property, single family residences are all you can do. You can't do duplexes, triplexes, fourplexes. Now you can do condos. You can do a townhome, and you can do a manufactured home that is on land that you own. But you cannot do 2, 3, and 4 unit properties. You can do an ADU that has a single family residence that has an ADU. That is a loophole that's allowed. You're just not allowed to count rental income from the ADU, but you can buy a single family residence that has an ADU. Now, I talked about cash. It's down payment, it's closing costs, it's reserves. Very few of you are going to require any reserves, so don't worry about reserves. That is not something I expect to be necessary. Really, for most of us, reserves with this program isn't important at all for most buyers. It's not. Let me say that a different way. I think reserves, extra money you have for a rainy day, is probably the single most important factor of success in owning a home. But that's because of the time that it takes to rebuild your reserve account after you've paid for your down payment and closing costs. A lot of people say, well, John, I don't want to buy a home because I'm going to use up all my reserves. And you said the single most important factor in buying a home, success in buying a home, is having reserves for a rainy day, for when something happens to the roof, when something happens to some repairs. Well, the problem is that the other challenge is, if you don't own a home, your reserves don't matter, because you never built wealth through home ownership. So don't not buy because you don't have reserves. But once you buy, getting reserves is critical to rebuild. But for most of you, it's down payment and closing costs that you have to think about for the cash. Make sure it's seasoned. Okay, make sure the money has been there. I talked about that a couple minutes ago. Cash is a 4-letter word. Do not deposit cash. I'm talking about green pieces of paper with pictures of presidents. Do not deposit cash. The documentation matters. Prove where your money came from. If you're pulling money out of your 401k, I've got to see the paper trail. If you're selling a vehicle, I've got to see the paper trail. It is critical. But remember, with Dream for All, the timing of when we need the money is we need it all at the end. We don't need it today. So you can get a gift for money later if you don't have it. Really, you can get into a house with very little money, because we can use the Dream for All money to pay almost all of the closing costs as well. Now, credit. Credit is how well you paid your bills in the past, because it determines your rate. Now, in the Dream for All case, it doesn't determine your rate. So I stole this from a different presentation I did, and that's a lie. I'm lying to you. Sorry. It doesn't determine the interest rate. You get the same rate regardless of what your credit score is with the Dream for All program. But here's the deal. There's lots of myths about what works and what doesn't work, what fixes credit and what doesn't. What I'll tell you is there is nothing somebody can do for you that you pay them to do that you can't do for yourself. There's also no magic bullet. There's no money you can pay to get stuff erased off of your credit report. It just doesn't happen. By the way, those of you who are popping on right now, if you have questions about anything Dream for All related or related to what I'm talking about with the process of owning a home or buying a home, post those questions in the comments and I'll be happy to bring them up as they come up. So you credit-wise, there's no magic bullet. There's no specific company you can pay to erase the bad stuff off of your credit report. So just remember that as you yourself or someone you know thinks about, hey, well, I can get that fixed. I can get that erased. That's very, very difficult, if not impossible to do. All right, income. So when we're looking at income, again, I'm explaining all this so that you understand what we're looking at, because you're getting pre-approved today for a loan we're not doing for 2 to 5 months. And so you've got to pay attention. What we're doing is we're calculating a debt to income ratio, and it's pretty simple, actually. We just take your total gross income monthly, and we can and times 50% if your score is over 700, times 45% if your score is under 700, between 680 and 700 or 660 and 700 if you're low income. And that's the total amount of money you can spend on anything. Now we simply subtract from that your monthly debt obligations on your credit report, car payments, child support, alimony. Those aren't on the credit report, but they count. And we subtract from that your student loan payments. By the way, if you're on an income-based repayment plan and your repayment is zero, I get to count the zero for the Dream for All program. So that's really, really good news. So everything that you pay per month, and so if you make $10,000 a month in income or $120,000 a year, then your credit score is over 700. That means that you can spend $5,000 a month on a house payment. So one of the ways you can help increase the amount of money you can spend on a home is to pay down some debt. But my encouragement is don't actually pay down the debt without talking to me first, because maybe that money is better used for some of the closing costs. Maybe that money is better used to pay down a credit card to keep your credit score high enough, because sometimes paying off debts can lower your credit score. So don't just start paying off debts willy-nilly thinking it's going to help. Talk to us. But as far as income goes, we take a 2-year look backwards so that we can predict 3 years forward. Now, it sounds kind of strange. Like, John, what are you talking about? Like, I just look at my tax return. That's what I made. No, we're actually trying to predict the future based on looking into the future and using the past as a guide. And I can't really explain it better than that, other than to say, if your job changes, and I've had so many people recently who've had different situations. One guy today got a pay raise. He actually didn't get a pay raise. He got a job offer to get the job that he actually dreamed of getting when he moved to California. And he applied for a job at this particular organization, and they didn't call him back. And so he got a job at a different organization. He got a call this morning saying he's going to get the dream job. But it means he's going to make too much money to qualify for Dream for All in the county that he wanted. So there's a lot of things that are going to come into play, and he already has his pre-approval letter. So now what? Well, he's got to look to buy in a county that don't take the job, or look to buy in a county that has higher income limits. Okay. But the funny thing is that the income calculation is challenging, but predicting that is pretty straightforward when you're a W-2 employee, especially when your income is stable and not variable. But it's very, very challenging when you have variable income like overtime, commission, or bonus. Even more challenging when you own a business. The numbers are never what you think when you own a business, okay? Types of loans I'm actually going to skip. The only loan we're doing for Dream for All is a conventional loan. As a matter of fact, I haven't even updated this because it says 726 is the limit, and it's actually 766. This is last year's slideshow. How horrible of me. Anyway, and this is wrong because this doesn't really apply to Dream for All at a 620 credit score. I'm going to skip right past that. I want to explain to you the process of buying the home, because this is going to be like going to the dentist and having your teeth pulled. You're going to get so frustrated at times over the things that I ask of you, the things that Cal Haffa asks of you, the things that your realtor asks of you. Just understand, the mortgage industry has had the full regulation of the federal government come down upon us after the 2008 financial collapse. We are blamed for collapse in the global economy, and so we have a lot of regulations, plus a lot of just challenges going on with the economy right now. And let's not add in the challenges of the fact that the government's now coming after the real estate industry and how they do business. So there's a lot of challenges going on. Just be prepared for it. Be prepared for it like you prepare to fly in an airplane. Because I know y'all have flown in an airplane before, right? And when you go on an airplane, you run into turbulence. It happens. But it is not the sign of a bad pilot. The pilot's job is to get you from point A to point B safely. On time is a bonus. Okay? Getting good food and hot coffee is even a bigger bonus. The pilot cannot avoid turbulence. Now they're going to try. The pilot's going to radio over to the air traffic controller and to other pilots who have just flown through the area saying, hey, should I go higher or lower or a little left or a little right to avoid the turbulence? But at a certain point, if they go too far out of the way, they're either going to be super late getting you to your destination, or they're going to run out of gas. And running out of gas when you're in the air, it's frowned upon in the pilot industry. Okay, so you want to make sure you understand the role of your pilot sometimes means flying straight through the turbulence. That's my role. I'm your pilot through this process, and I'm going to fly you straight through the turbulence, but I'm going to get you to your destination. I am your guide, whether it is with Dream for All or through a different program, whether it's this year or next year. I am piloting the plane. I am guiding you to your destination. I'm going to help you accomplish your goal of home ownership if you will let me. But it isn't going to be simple. It isn't going to be easy. And there are going to be challenges and bumps along the way. And I want you to be prepared. So here's what the process is going to look like. By the way, I probably got another 10 or 15 minutes. If you guys have questions, feel free to post those in here. What's the process look like? Well, the first thing you get is your pre-approval, pre-qualification, really your pre-approval. And you'd say your next step is to go find a home. Now, between now and then, you got to wait to get your voucher. Once you have your voucher, you're going to have a 90-day window to take care of steps 2 through 6. So step 2, finding your new home. So you've got to find a realtor that you're going to work with. You need to be prepared to sign an agreement with that realtor that goes over how much money you're going to be paying them for their services. And you say, oh my God, John, I don't have the money to pay for that. Well, I'll tell you what, historically, the seller of the home has paid for both real estate agents. Recently, there has been a settlement proposed with the National Association of Realtors that doesn't stop that practice, but it simply says that it can't be required, that the seller cannot be required to pay for your real estate agent. Some sellers are going to hear that in a competitive market where there's not a lot of homes for sale and say, if I'm not required, why would I do it? But more importantly is once you sign that agreement with your realtor saying, I'm going to pay you X percentage, the realtor then has to negotiate that on your behalf to get the seller to pay it. But the seller might have 3 other offers from people who aren't requiring that they pay for the realtor's commission, and it's going to make it harder for you to negotiate. But if you have the cash to pay for it, we're okay with you paying for the seller, your agent who's representing you. But a lot of you don't have the cash to pay for it. And we can't just wrap that into the closing costs in most situations. We're hopeful that we might have some options to do that by the time summer comes, because this all is only about a week or 2 old as far as this new settlement and what the language is going to be and how we implement it. But the bottom line is you need to find a realtor to help you find a home. And now is the time to start searching for a great real estate agent. Because whether you're buying a home using Dream for All or you don't get a voucher accepted and you work with me to find a different type of program to buy a home, the fact of the matter is you want to have a realtor on your side that you can have guide you through the process like I'm guiding you from the lending side. Once you write an offer on your home and the offer is accepted, a few things are going to happen. The first thing is you're going to pay me for an appraisal. Okay, depending upon your market, that's anywhere from $600 to $850 for an appraisal. You're going to pay me for that right away because we got to get the appraiser out. You're going to write a check for what's called an earnest money deposit. Because in the contract, when you wrote the contract, you said to the seller of the home, I'm serious about buying your home. And I'm so serious that I'm going to write a check for some money that if I cancel for no good reason, you get to keep my money. And that is mandatory that a contract is not binding unless there's money that exchanges hands. And it could be $1. But seriously, what seller is going to say, oh yeah, no problem, I'll take my house off the market if you just put up $1 to prove how serious you are? How serious are you if you only put up $1? And so you're going to have to put up some money at the time that you find your home, okay? That is your earnest money deposit. That money counts towards your portion of the down payment or your portion of the closing costs. Or if you're having the Dream for All program pay for all of your down payment and all of your closing costs, you get that money back the day you get your keys. You get a payday. You get your money returned to you the day you get your keys. Out of the 9 people I helped last year, 6 of them got all of their money back. Close to all of it. $500 here, $600 total for another person. Like, it was pretty darn close. But the fact of the matter is we got a majority of their money back to them because that's how they wanted it to be structured. So you have to write a check for the earnest money deposit. You have to write a check for the appraisal fee. And you have to write a check to pay for your inspections. You want to double check to make sure, based on your realtor's recommendation, do I do a home inspection? Do I do a roof inspection? A well or septic inspection? There is lots of inspections that you might want to do. And they could be anywhere from $200 to $500 a piece. But you don't want to end up owning the house and find out about these problems. Okay, the term is caveat emptor or buyer beware. You have to be aware of what you're buying. This is why they're giving you a 90-day window to shop for a home once you get your voucher. And if you get your offer accepted on one and you cancel, you still have time left to go find another one. Okay. Okay, I got a question here and I want to encourage questions. All right, so can I buy a home from someone I know personally, but the property isn't on the market? Yes, it is not required that you buy a home that is listed publicly on the market. The Dream for All program does not require that you use a realtor. I suggest you do. It does not require that you buy a home that's publicly listed on the market. I don't suggest you do. Like, if you can find a deal and you can find somebody willing to sell you a home without competing with other people, great. No problem at all. So that is absolutely a great question. And guys, please bring the questions. That's what I want to do, is make sure I'm answering your guys' questions. So you have to write a check for the earnest money, for the inspections, and for the appraisal fee. Now you have something called contingencies that you're going to write into your offer. Now I'm a little nervous. I'm a little nervous right now about the housing market and about how busy the market's going to get this summer, when we've got 2,000 people up and down the state running around with their lottery ticket in their hand, dying to buy a home in the next 90 days. And so those people are going to be more willing to do whatever it takes to get an offer accepted. Some of you, will be more willing to do whatever it takes to get your offer accepted. Be careful with that thinking. But understand, you have 3 contingencies that are included in your offer. And it's critical to understand that these things matter on how you get your offer accepted. Your first contingency is your inspection contingency. That says, hey, Mr. Seller, I can do inspections on this home. And if I find something wrong that you won't fix for me, then I don't have to buy your home and I can have my earnest money deposit back. Okay. You have a time frame for that. That's negotiated. The shorter amount of the time frame, the happier the seller is, because the quicker you don't get the right to cancel. Now, by the way, as a buyer, you can never be forced. By the way, I'm not an attorney, not providing legal advice. Before I finish providing what sounds like legal advice, this is not legal advice, and I am not an attorney. But if I were an attorney, this might be what I would say, which is, as a buyer, you cannot be forced in California to complete the purchase. But you will lose your earnest money deposit if you don't have a contingency that you used to waive or to get out of the purchase contract. Okay. So when you're writing your offer, you have the 3 contingencies: the inspection contingency, you've got the appraisal contingency, which says, hey, if the house doesn't appraise for the price we're paying for it, then I can cancel and keep my money and keep my earnest money back. Okay. And you have your loan contingency that says, hey, if a problem happens with my loan and I don't qualify, I can cancel and get my money back. And you'd say, John, if something happens to my loan and I don't qualify, I'm not buying the house anyway because I don't have $1 million or $500,000. But you also just lost your earnest money. Because if you don't have a loan contingency and there's something that goes wrong with your loan, my job, by the way, is to make sure that doesn't happen. It is very rare that something happens to a loan that we can't close the loan and we didn't know it going in. Now, there's times when I'll tell somebody, hey, I'm super worried about this. I'm not sure if we're going to win this battle and people want me to go anyway. And I will fight for you and I will fight for anything on your behalf. But I'll tell you the truth when I'm worried. Okay. But if you cancel outside of any of those 3 contingencies, you you lose your earnest money deposit. So be aware of that fact. Okay. Also, timelines matter. And timelines are going to be something we need to be concerned about as far as how quickly can we complete the transaction. Once you get your voucher, we're going to get your loan into the underwriting department. We're going to get it fully underwritten so that you can write a shorter escrow so that it's already been completed. Underwriting's reviewed it. Everything's been signed off. But guess what? We have to wait for the state. We have to wait for CalHFA. And so CalHFA last year got super backed up. This year, hopefully, because we're going to have 90 days, we don't have everybody in an 11-day time frame trying to get their loan done at the exact same time. But I think we're going to end up with a lot of people at the beginning jumping in right away. We're going to have a lot of people right at the end of 90 days jumping in right away. So just be aware, I'm doing everything possible to shorten the time frames to get your loan through the underwriting department and approved so that we can get you as quick of a close of escrow as we possibly can. So that process, here's what that process looks like. Once you're in contract, we're going to send the file to our processing team. They're the liaison, step 3. They're the liaison to the underwriter. The underwriter is a spooky person that's like the guy at Oz behind the curtain that you're never going to talk to. It's kind of true. Okay. They're not like creepy. They're real people, but they are behind the curtain and you're not going to talk to them. You talk to me, you talk to my team, you talk to the processor. But they're going to re-verify everything we verified now. So if you're looking at your overtime year to date right now and you say, oh yeah, it's on track, then you stop working overtime, we're going to check again in June when you're writing your offer. You get your offer accepted and the processing team's going to call me and say, John, we've got a problem. And that's where we're going to have an issue. That's why we have a loan contingency. But the truth is we should catch that before you're in contract, because those who get a voucher, we're going to get you straight into underwriting so that we don't have those issues. The underwriting department is the person who has the final authority to say you're good or you're not good. Okay. Once you've been through underwriting, then we create your final paperwork. That's when you meet with a notary to sign your final paperwork. That's when you bring in the rest of your money. The rest of your down payment, if you're bringing down payment money, the rest of your closing costs, if you are paying for closing costs, that is when you bring in your money, and then you move into your home. Okay, so that is the process of buying a home. I want to switch gears a little bit, talk about a couple of more topics here. I got try and wrap up around 8, so about 10 minutes or so left. I can run longer if we have more questions. But I got a lot of people saying, John, is it a good time to buy a home? First of all, what I'll tell you is it's like the question of, is it a good time to plant a tree? Have you ever heard that question? What's the answer? Is it a good time to plant a tree? When is the best time to plant a tree? Does anybody know? I'm going to give it about 10 seconds, see if somebody pops it in here. But when's the best time to plant a tree? The answer is 100 years ago. That'd be the best time to plant a tree because the tree's grown, it provides shade, it's well rooted, everything's great. That's the best time to plant a tree. But you can't go back in time. So when's the second best time to plant a tree? Today. Right now. Not in the future. Not some point down the road. People talk about timing the market. John, I want to time the market. I want to buy it this. I think the averages are going to go like this and the numbers are going to go like this. And I've run an algorithm and I think it's going to be this timing. Timing the market has rarely worked. It's time in the market. We're not talking about a stock that you're buying that says, hey, if I buy this stock at this time and then it goes up to this point at this time, I can time it and I can get out. You have to have a place to live. You can't get out of having shelter. Okay, you got to have a place to live. And so you're looking for, does this fit my lifestyle and can I reasonably afford it? By the way, don't think, hey, can I afford it? Nobody can afford a home right now. This Dream for All program, pretty much the best option to afford a home today, given how rates have caused payments to go up and house prices have caused payments to go up. So just understand, there's never a good time. But the fact of the matter is, with Dream for All, there's no question it's the right time. If you're not using Dream for All, I'll tell you that right now, the general public is still scared and sitting on the sidelines. They're waiting for interest rates to drop. They're waiting for house prices to drop. Well, I will tell you, I think interest rates are going to drop at some point in time. I think we're in the high end of where rates are, and they're going to come down from here. But I'll tell you, I think that when interest rates drop, house prices are going to go up. Now, why do I say that? Because historically, as interest rates went up, house prices went down. Because the average buyer in every neighborhood, in every market, could only afford a certain amount of money per month on a monthly payment. And so if the rate goes up, the only way to achieve that same monthly payment is if the price of the house goes down. Unless there's enough buyers wanting to buy those homes that the ones that can't afford it, they go by the wayside, but others are still there that can. If you rewind back to 2020 and 2021, you had people writing multiple offers on homes, and I mean multiple offers on homes, where we had 10, 15, 20 people writing an offer on the same home. Guess what? Only one of those people got the offer accepted. The other 19 were still shopping and ended up never buying a home. They're the ones that have been sitting there, and they're the ones that have been eating up the inventory, eating up as homeschool for sale. The prices haven't dropped. That proves that there's a lot of people waiting to buy homes, and then as soon as interest rates come down, those people are jumping back into the market and prices are going to go up. I was very excited and nervous that interest rates were going to come down this spring. I was hopeful and concerned that interest rates would be in the mid fives by now. Okay, maybe even the high fives. The fact of the matter is that would have spurred the market. That would have helped a lot of people be able to afford homes, but there aren't enough homes for sale already for the number of people that want them. And so basic supply and demand. If we cannot create more supply and yet we add more demand, it just makes the price of the homes that are there go up. 2 weeks ago, the president announced a program at his State of the Union, and he talked about giving incentives to people to buy homes. All that's really doing is creating more demand, getting more people to want to buy homes. But if there aren't more homes for sale, you just drove prices up and you didn't help anybody. Because all you're doing is saying, hey, if there's 5 homes for sale in my town, and there's 4 of us looking for those homes, then prices are going to go down a little bit because these 5 homes for sale are chasing these 4 buyers. When there's 5 buyers for 5 homes, it's a perfectly balanced market. When there's 10 buyers for 5 homes, now the prices start going up because these 10 buyers are competing. And that's what we're dealing with right now, is we have lots of buyers for few homes. And these programs, including the Dream for All program, are creating more buyers, not creating more homes. And so we're adding more to the demand side without adding more to the supply. And that means that Dream for All is going to drive prices up. The president's plan for giving credits for first-time home buyers. You might say, why do I want to buy right now if I can wait until the president gives me a credit? Why don't I want to get that credit? Because if he does, if the credits really come true, more people are going to want to buy. There aren't going to be more houses for sale. And prices are going to go up, and you're going to pay more in extra price for the home than what you got in the credit from what the president was offering. And I'm not being political. I'm not knocking what the president said. I'm simply telling the truth about basic economics. All right, we've got a question. If I want to put the money to decrease the house cost, is it negotiable to buy the house? For example, I buy the house as is, but I get a discount of $30,000. So that's a great question. I talked earlier about property condition. A conventional loan, which this Fannie Mae backs the Dream for All loans. A conventional loan says that you have to, and let me do this really quick, get rid of that. All right. A conventional loan says the property has to be livable with no health or safety hazards. So when you say condition of the home, if the condition of the home was livable, like, hey, we're living there, there's no broken glass anywhere, there's no doors falling off the hinges, there's no health or safety hazards, but it's old. The carpet hasn't been changed in 30 years. It's ratty and falling apart. Hasn't been painted at all. And it's just the countertops are old and dingy. No problem. You can buy it in as-is condition and negotiate a discount. Now, one of the things I'm concerned about your question is most sellers understand the condition, especially if they're using a realtor to help them sell the home, and they priced the property already based upon the condition. And I said most. Some sellers think their house is special, and that condition actually makes it more valuable. And those are the silly sellers that don't understand the market. And that's the silly real estate agent who's not educating their seller properly. But the fact of the matter is, yes, you can buy it in as-is condition and negotiate a discount. If they were saying, hey, I'm going to fix all of these things and I'll sell it to you for this price, and you're like, no, I don't need those things fixed. I'll take it at this price. You're fine as long as it's livable. As long as there's no health or safety issues, you're fine. But the definition of livable health and safety issues, that's up to the appraiser. And there's some things that the appraiser might call for that you're like, no, that's no big deal. But it might be a really big deal to us. So that's a very, very good question. And I appreciate that, guys. I'm open for more questions. By the way, if you haven't done so already, get a copy of my ebook. So scan this QR code and get a copy of my ebook emailed to you. So that if you don't, by the way, here's the trick. If you're watching me on your phone, take a screenshot right now, and then you can send that picture to yourself or to a friend and use their phone to take the QR code. So screenshot me right now. Okay, perfect. That's your screenshot. And that's how you're going to get the QR code. All right, so let's keep going and finish out. You are very welcome, by the way. I'm happy to help you and I'm happy to guide you. Thank you for watching. All right, just do me a favor, share this with your friends. Click the share button right now, share it on your social media. That's the best way you guys can show me appreciation. All right, now let's go back to here. So I talked about timing, guys. There isn't a good time or a bad time to buy a home. It's about time in the market. And so I want to wrap up with a couple of concepts. First of all, what are the benefits of owning a home? Well, the financial benefits, wealth building, when you own a home, you're typically between 5 and 10 times more wealthy, the homeowners are, compared to the renters. It's the reason why the state has focused this money on first-generation home buyers, because they're trying to target people whose parents did not build wealth through home ownership, and they're trying to break that cycle. They're trying to help the new generation of homeowners, because it is statistically proven that when your parents own a home, you're more likely to own a home yourself because you have the generational wealth that helps you make it happen. And there's 3 ways you build that wealth. The first way is a tax write-off. You pay less in income taxes because your property taxes and your interest are tax deductible. So at the end of the year, you owe less money to the IRS, or you can change your withholdings and you can pay less money every single pay period to the IRS and take home more money. The second is a forced savings account. Every time you make a mortgage payment, part of that payment pays down your balance. Part of that payment goes towards your pocket because you owe less money on the mortgage, so that when you sell the house, there's more money left over for you. And the third one is appreciation. Now, I know that with the Dream for All program, you're sharing 20% of that appreciation with the state, but 80% of it belongs to you. If you didn't buy a home, you get 100% of nothing. Way better off to get 80% of something than 100% of absolutely nothing. All right. By the way, if you have not done so, I've got a great mortgage calculator that is part of my mobile app. So if you do not have my mobile app, scan this QR code in the middle of the screen. It will take you to my mobile app. You can download it and install it. That app serves multiple purposes. First of all, it's got a great calculator in there that you can run payment figures. Matter of fact, if this works correctly, you'll be able to see a quick video here as I walk through it. And I click the button that says purchase. You click the button that says conventional. You would change the sales price. You change your down payment to being 20% of the purchase price as a down payment. Your taxes and insurance are in here correctly. Your taxes are 1.25%. You just have to adjust the rate to be what Dream for All has as their interest rate. The insurance is actually 0.35%, which should be correct. And then you change your purchase price either by typing in the numbers or using the slider right here. And you can actually see what your monthly payment is. Click calculate down at the bottom, and it gives you a complete breakdown showing you how much is going to principal and interest, how much is taxes, how much is insurance. It gives you a full breakdown of all of that information, all within my mobile app. And it serves as your way to communicate with us. That's how you upload documentation to me. That's how you submit your application and securely send us paperwork. And it's got a chat function that you can communicate with us directly. So if you do not have my mobile app, this is where you need to start. If you do not have my book, up there is where you need to start to get a copy of my book. All right. So guys, here's it matters who you do business with. It matters who helps you with your loan. And so I'm going to end with this, because who you pick to do your financing matters more than ever. First of all, the reputation. I've got a great reputation all up and down the state. I'm one of, a lot of you are watching me because I've really focused on providing really good information about this program, and that's helped my reputation with people as they were trying to get approved last year and also this year. So reputation matters. The reputation of some larger companies that are online lenders doesn't help you get your offer accepted. I also am really focused on what do I do to help you get your offer accepted by the work that I do before your offer is reviewed by the seller. So I am calling the listing agent. I'm talking to them about the strength of your offer. I'm explaining to them what Dream for All is and how it works. I'm giving them the confidence that I am a preferred CalHFA loan officer. Now, there are preferred companies, but lots of companies who are preferred companies, and all of the loan officers at those companies can do these loans. My company is a company that is a preferred company. It's not a preferred, an approved CalHFA lender. Okay, lots of companies are approved CalHFA lenders, but only a few loan officers are preferred loan officers because of the number of transactions we've done with CalHFA and the skill at which we've managed them. And I am a preferred loan officer at CalHFA. So that also helps with the credibility of the strength of your offer. We fully credit, income, and asset underwrite your files to help you remove those contingencies we talked about and to make it a quick closing. So guys, it's 8:03. I'm going to wrap up right now. If you have any other questions right now, please feel free to post them. If you're watching this recorded, post your comments, and I'll be getting back to those later. If you have not done so already, scan this QR code right above me and get a free copy of my book. Okay, it's a book about the Dream for All program, everything you need to know, the process, and it's bookmarked so that you can jump directly to the chapter. It's a digital book, makes it super easy for you to get all of the understanding at your fingertips, and you can share it with all of your friends and family. So if you haven't done so already, please download a copy of my book by scanning the QR code above. Guys, I really appreciate you joining me. As a reminder, every single Monday night for the next few weeks, until the program is over, so the next 5 weeks, I am going to be doing a live webinar at 7 p.m. every single Monday night. So bring me your questions, send me your friends and family. Once we get in, I'll be actually doing a live recording of the portal and how to enter information into the portal on Wednesday the 3rd. So please, if you have not bookmarked my YouTube channel, subscribe and share it with everybody you know, and allow me to help guide you and everybody you know to your future wealth in homeownership. Thanks, guys. Have an absolutely wonderful evening, and we'll talk to you soon. Good night.